我想刚才大家都很高兴啊，而且学习了很多，听到非常多非常 excited 的新闻跟一个做法啊。我想这个大家对未来更期待更多的一种希望。那我开始就讲说，我们2大方向，一种是从科技方面着手，那一方面是从这个金融财务方面着手。那下一位啊，我们请一位也是这一方面一个专家，那么这个奇耀资本公司的张豪仁总经理啊，那么他是从中国大陆来，那么他非常的杰出了，他是北京大学毕业，密歇根大学跟宾州大学的沃登商学院毕业。那么他做的公司啊，是在做这个中国风险投资公司，主要是投资在西方和中国方面的清洁技术方面的公司。那么他过去的专业经验是非常的丰富啊，他曾经在 McKinsey 公司在大中华事务所当顾问，那也帮助台湾政府从事这个制定30年能源的这个环保的计划，那这是一个很大的一个计划，那么对整个台湾的这个方向有很大的一个贡献。他也在中国主导2家风险投资公司，那么并监督政府资助的科技计划，那么也曾经在这个矽谷担任奇异公司的助理副总裁，后来搬回中国创立这个知识产权风险投资基金及风险投资公司的清洁能源资本等等啊，那可以讲在这方面他是一个非常的出色。那我们请大家以掌声来欢迎他好吗？谢谢。
让我们欢迎奇耀资本总经理 Ms. Fray Chang 与我们分享巴黎气候峰会后，亚洲洁净科技与气候变迁下的无国界投资策略。
各位大家好你好，我叫张豪仁。那因为我是美国的 ABC American Born Chinese， 所以我还是用英文来演讲，这样子你们听得不会那么累，我也比较方便一点。Thank you for having me at this conference. I'm very happy to be here, especially since I worked here in Taiwan 20 years ago. As Jen Borcher said, I worked for McKinsey. At that time, we were involved in a 30-year energy and an environmental policy for the Jingjianhui. So I got exposure to trying to count, actually, the number of motorche in Taiwan. So, 20 years later, we're finally trying to address this issue. But I'd like to share with you today what we're doing in Shanghai, where I'm based. I'm part of the GCCA. There's 50 plus clusters around the world, and we're based in Shanghai, and our cluster is called the China Clean Tech Collaboratory. And I'll explain why we have this name. But I also run a venture capital firm called Unicorn Capital. And like the other clusters around the world, we have government backing. So from our side, we have 发改委，还有科技部的投资。And then we use this money to invest in companies like Gogoro or other companies from around the world. And so we have some money as investors, and we believe that is important to have this integrated hybrid, and I'll explain why that is. So the title of this presentation is After COP21. So why is it after when it hasn't happened yet? Well, I think, as Eugene was saying earlier, this event, I guess this discussion to happen at the end of this month has actually been in the making for over 20 years, right? The Kyoto Protocol, and finally there may be some commitment and targets to hit. But as Eugene said, some of us are not so optimistic they can achieve the things that we need to do. I am of that camp too. Policy is good, but policy is only one aspect. There's the financial system and the financial mechanisms that we in the private sector and the public sector have to focus on. And there's great companies out there that have great solutions and innovations, but they're not getting funded. And so I believe what we have to do, and myself with a venture capital background, has to also innovate in the financial system. So as you talk to Chris, he'll tell you that it's clean tech meeting fintech. So what we've tried to do in looking at how to invest in clean tech is innovate our financial way of investing. And so I'd like to share with you some of the things we're trying to do. I'm also learning, we're also pioneering. So if you have ideas of how we can do this better, come talk to me afterwards, and we can speak in Chinese or actually in Minanhua, what tiao bei hang gong. Okay, so we'll do our best to communicate. So as Eugene mentioned, there's a lot of money out there. There's trillions of dollars in the pension funds. So at the high level, that's the big funnel of money. But we have also a lot of great projects like we heard yesterday, but they're not getting the money they need. They maybe need $5, $10 million, but it's very difficult when you're managing trillions of dollars to get $5 million or $10 million into these well-deserving companies. And as Eugene said, it's partly because this financial plumbing system, this infrastructure, has to be built. Now, why isn't it being built? Well, we'll explore part of the reason for that. I believe it has a lot to do with how people need to make money. So when the pension funds give money to the big fund of funds that manage several billion dollars, they have to return a good investment ROI. So maybe that's 15, 20%. And in order for them to give money to the VC funds, they have to return, on average, 25%. So when the VCs meet Gogoros of the world and other innovative companies, those companies, we're asking them to return on investment maybe 50 or 10x. So a big return in order to make it all worthwhile. And unless you're able to do this, the money doesn't flow. So you can set up the piping, but you have to have the money go through. And so how can we, as investors in this middle layer, make good investments, also make good investments in Asia, where we have to fix the problems. Otherwise, as Eugene said, this is where the war could be lost, right? So it's great to have the US and Europe making advancements, but if you don't fix the problems here in Asia, we still have a big climate change problem on our hands. Uh-oh. Part of the reason it's been difficult to get money into the VC and PE fund managers' hands is because the clean tech industry or the clean tech innovators inherently soak up a lot of cash and take a very long time to return a good investment. And the nature of clean tech is really because it's industrial. It's not like a software company or a social media company that is very capital light. And so you have to put in a lot of money and take a long time to get a good return. And frankly, in Silicon Valley years ago, they used to invest in semiconductor equipment companies or fabs that are $1 billion. So the VC world can do that, but they're choosing not to, partly because of the overall economic infrastructure in the West. But in China, that's not true. So if we can leverage what China has to offer to help these capital-intensive companies get through that second valley of death, then it might be a way for us to address climate change in Asia as well. So China is a really good place to do innovation acceleration. The markets are big. There's government funding. There are early adopters. And so all these factors lead to a very robust and a very supportive environment for bringing clean tech companies to market. And to go a little bit deeper, from the venture capitalist perspective, it's a good place because you can scale up technologies, the markets are big, and and the exits, meaning M&A or IPO opportunities, are there. But what's sort of lacking in China, from my perspective, is really innovative, high-tech companies. But that exists in the West. So if there's a way to bring the West and China and the East together, then you could complete the whole solution. And people are doing that. So China is the world's largest clean tech investor. Last year, it invested nearly $90 billion US. That's 25% of the world's clean tech investing. But on the VC side, even though it's the second largest, it only invested $1 billion. So, just about 1%. So the gap, the opportunity to invest more from the VC side in innovation and early stage companies is there. But the problem is there aren't that many good clean tech innovations in China when I run around and look for them. And that's why a lot of my peers are investing overseas. So almost half the deals, or about a third of the deals that have been done recently, have been cross-border investments. Here's an example or a sample of the various clean tech deals that were done in the last few years. On the left-hand side are the startup companies, and they're mostly from the US. There are some from Europe, but I just have only this data. And then if you notice on the right-hand side, the people who did these investments are a combination of venture capitalists, but primarily they're industrial companies. And so the venture capitalists actually are not doing this on a systematic basis, but could. The industrial companies are actually buying companies from the West that have excellent IP that are distressed. And that's a shame, because what happens is you have investors and great tech companies that go bankrupt, and then they get bought for practically nothing. So isn't there a better way for us to come into the industry and help these deserving companies get the capital before they go bankrupt? And so to understand the situation a little bit deeper, we need to understand what these startup companies need. They're small, they don't have a lot of resources, and so when they go to China, they're looking for capital, and they can't do it alone. So our solution is to match the needs of the China market to what's being developed in the West. But it's not just a matchmaking role or a banker role or a broker role. You really have to understand intellectual property licensing, which in essence is a contractual way to share the economic benefit and to protect those who made the IP, but also let both sides win. And then because these are small companies, they also need financing most of the time, so you have to provide that as well. So what you actually need to provide is a full service of what a small company needs, from consulting and market entry, which is what we used to do for McKinsey. Help even the big companies like Procter & Gamble enter the China market, but even the smaller companies need it even, of course, even more. And then once you help them determine the market opportunity, then you have to actually finance them and then help them get things going on an operational level. So this is what we've set up in China. We can't do it alone. There are a bunch of different stakeholders, earlier in some of the presentations, we talked about collaborating and walking together. There are various people in the stakeholder value chain to bring into this platform. So what we have is some Chinese government money. We have GE and some European multinationals who are also part of this platform. And then we have the venture capital side to support these companies. And then we can do this in scale to get companies through the second valley of death. And then because I'm running out of time, I will just share one example of how we've actually done this. This is not a theory. This is stuff that we've been doing to prove these case studies so that we can show the pension funds to give us money so that we can put this money into companies like here. And I'll take just 10 or 20 seconds to explain this case example, which it was a US company that was struggling. They had a microorganism that could take carbon monoxide coming out of the steel plants, the waste flue gas, and convert that into ethanol. So taking a waste stream and turning it into revenue. And this company was having difficulty in the United States, but we brought it to China, introduced it to the largest steel company in China. They invested, and now today it's one of the leading biofuel companies in the world getting ready for an IPO. Okay, thank you.
Thank you, Mr. Chang.